Ladies and gentlemen, good day and welcome to Senco Gold Limited Q3 FY24 earning conference call hosted by Ambit Capital. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference to Ms. Vidisha Seth from Ambit Capital. Thank you, and over to you, ma'am.
Thank you, Rhea. Good afternoon, everyone. I would like to welcome the management team of Senco Gold and thank them for giving us the opportunity to host their third quarter earnings call. We have with us today Mr. Suvankar Sen, Managing Director and Chief Executive Officer, and Mr. Sanjay Concall, Chief Financial Officer. Over to you, sir, for your opening remarks. Thank you.
Thank you, everyone. Good afternoon. This is Suvankar Sen speaking. Along with me, Mr. Bankar, CFO, is there. Before we begin, we would like to wish all of you a very happy Valentine's Day. Today is 14th of February. And along with that, today is also the auspicious day of Saraswati Puja. And, may all of us driven by more knowledge and more love and have a very happy and successful life. Now that we come to the numbers, the performance as a team, Senco Gold and Diamonds, we are extremely happy and excited to inform all of you that if we look at our overall performance, quarter 3 and YTD 9 months have been a great performance. This year has been a milestone year for Senco for the fact that we've got our company listed, and it is a big responsibility to ensure that the trust and the performance of our team continues to be at its best. So just coming to the numbers, if we look at our quarter 3 results, we've done a turnover of 1,650 odd crores for FY24 compared to 1,339 crores in quarter 3 of FY23, which means that there has been a 23.3% growth in terms of revenue if we compare on a quarter-on-quarter basis. And if we look at the YTD numbers, 9 months FY24, we've done about 4,104 odd crores compared to 3,263 odd crores for 9 months in FY23, which means that our growth has been in the range of 25.8 to 26% for a 9-month basis. Now, what is it that has driven the performance and the top-line growth is the fact that quarter 3 is a quarter of Dhanteras, Durga Puja, festive season, Navratri. We are all aware that we've seen a large number of weddings that has happened in this particular quarter. We have been speaking of around 35 lakh weddings happening all across the country. So putting everything together, we've seen that there has been a huge response from the consumers in terms of buying and purchases for the festive season. Yes, we've seen that, towards the end of quarter 3 in December, there has been a slight slowdown with the, end of the festive season, which happened around 15 December. But as we moved on to January, we could still see a slight increase in terms of interest amongst consumers in terms of purchases. If we look at our EBITDA, Mr. Baka will get more into details. But all in all, we've seen that on a 9-month basis, we've grown EBITDA levels at 15.2%. In terms of PAT as well, if we compare to the 9 months FY23 to 9 months FY24, we've moved up from around 132 odd crores to 148 odd crores. So around 12.4% has been the growth in terms of PAT. The number of stores that we've added for this particular quarter today, we can see that for 9 months we've added around 19 stores under the kitty of Senco Gold and Diamonds. So therefore, our number of stores, as I speak to you today, stands around 158 stores as on, 2nd of February 24, or as we speak to you today. In terms of overall, what has been the lever that has helped, us to perform for the whole year? We can say that there has been a steady shift from the unorganized to organized. We could see that the old gold exchange that we have been getting from our consumers has been approximately 33 odd %. And the best part is that, a large quantity of old gold that is coming from the consumers, which is approximately 75 to 80% of the old gold that we are received, is the old gold which does not belong to Senco. That means that, consumers have their idle old gold lying with them. So along with the purchases that they are doing, they are ensuring that with the hallmarking becoming mandatory, they are converting their old family jewelry that is there and buying new jewelry. In terms of certain exciting new initiatives we've taken, we have opened two stores as a pilot under the brand name of Siness, which is the brand that we have launched for lab-grown diamond jewelry and leather accessories. So in the city of Calcutta, we've opened two stores in two malls, one store each, and that would be focusing on driving the lab-grown diamond journey. We want to understand how the consumers will behave. We believe that there is a big potential in the future. So along with the fact that, the overall performance, we've grown by 9% in gold jewelry segment. We've grown 40% value terms in diamond jewelry segment. If you look at the volume, we've grown by 27% in volume in diamonds. So those numbers are doing well. What we are seeing is that especially for the smaller ticket size items, consumers are preferring studded jewelry, and that is where our studded ratio has moved up from 11.4% to 11.8%. And that is the reason what we see is that with 14 karat and 18 karat hallmark purity of gold that is being used for the studded jewelry, it is becoming more and more affordable for the consumer to shift from buying 22 karat plain gold jewelry for the small ticket size to the diamond jewelry, and that is driving the overall sales for the business. Solitaires, pointers, we have seen that there has been price corrections that have taken in the segment of diamonds, which is 30 cents and above. And we as a company have been focusing on ensuring that more and more consumers can afford to buy solitaires in the natural diamonds category, and accordingly we are focusing on the same. So with that, I would now request Mr. Banka to take you through the details of the numbers. And in terms of collections and designs that we have launched, we have seen that, with the wedding season, we had the Vivah collection that was launched. During Dhanteras, we had Shagun collection, which was the average ticket size of 50,000 to 1 lakh rupees. A lot of designs were launched under the diamond category as well. And very recently, we've launched the Ram Mandir collection with the onset of, the Ayodhya temple. So we were one of the first few jewelers to launch the collection regarding the, in the honor and memory of Lord Ram. At the same time, in terms of new initiatives, ONDC is a platform that is being created by our government to ensure that we can penetrate deeper into the tier 2, 3, 4 cities. And we've been one of the first few jewelers to get ourselves enrolled in the platform to reach out to the customers at large. Now, just a little bit of yes, 19 stores we've opened. The number of franchises out of those 19 stores has been 4. The company-owned, company-operated stores have been 15. And going forward, we would like to continue with the 18 to 20 stores to be grown year after year. So the endeavor will be that, yes, we want to open more franchisee stores. This year, with the gold prices moving up a little bit, the number of franchises have been comparatively lower. But that is something that we are conscious of, and we'll try to focus on ensuring the number of franchises keeps growing. And with that, I would now request Mr. Banka to take you through the detailing of the numbers.
Yes. So thank you very much, sir. While we have given a broad background of number, our EBITDA percentage has improved substantially in the current quarter, while it was lower in the Q1 and Q2. So we achieved the EBITDA percentage of 11% in the current quarter, and hence overall our 9 months EBITDA improved to 7% as against 7.7%. And similarly, our profit after tax for the current quarter, we achieved 109 crores. So till H1, it was around 40 crores, and with 109 crore of tax for the current quarter, For the whole year, we have achieved 148.9 crore as against 132 last year. So we have achieved a 15.2% growth in EBITDA and 12.4% growth in PAT. Here it is important to state that EBITDA growth is a function of the investment. So as we are growing, we have to continue to make investments in scaling up our people, in investing in their training. The marketing costs we have consistently developed, and particularly in the current year, we have gone to tier 3 and tier 4. Like, we have gone to Bhagalpur, Ara, Jaleshwar, Dumka, places, such areas where there are huge potential. And hence, in order to realize the full potential, we have to continue to invest, and that's why you are looking at a 7% EBITDA margin. Similarly, a major part of this growth has come from triple S growth, which we call SSSG, which is in the range of 17%. So out of the 26% growth, 17% growth is the triple SG growth. What is more important to understand that this triple SG growth is much higher in South, where it is 24%. So zone by zone, as you said, is secular growth. The zones or areas where the per store sales was lower, there we have achieved a higher growth. So overall, as you said earlier, we continue to look at minimum 18 to 20% growth in terms of our last CAGR trend of 20%. As we have grown 15 plus 4 stores in the current year, that has led us to invest in the working capital. So our inventory has also increased from March 23 versus December 23 by around 350 to 400 crore. We also have invested in capex for the store. So overall, we have looked at maintaining the growth momentum, investing in future, and investing in inventory. Incidentally, as you stated earlier, our blended borrowing cost, which is sum total of gold metal loan and our working CCWCDL, is below 6%. So that helps us to maintain the growth momentum. And as you said earlier, our debt equity ratio, debt primarily the working capital, will be in the range of 1.2 to 1. With that, we stop our remarks, and we invite you to ask any pertinent questions so that we can delve more in the performance so far.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Vidisha Seth from Ambit Capital. Please go ahead.
Yes, thank you. Sir, can you give some sense on the ongoing demand trends for the current quarter? Has the 20-25% growth momentum continued? And just as a follow-up to this, what is keeping the jewelry sector insulated from the overall consumer slowdown? We understand that the category is pseudo asset class type of nature, but just wanted to get your take on how long can this growth momentum continue for you and the overall sector. That was my first question.
Right. So see, quarter 3, usually with the weddings that were in place, was always having a much better performance. But this particular quarter, we've been running Valentine's Day offer. There have been weddings that have been happening in this particular quarter as well. So if you really ask us, as we began our journey in the beginning of the year, we had given an estimate of a growth trajectory of around 20-odd%. Now that we are ending the 9 months and we are at about 26%, so obviously our 20% growth over the last year is very much in the radar, and I think that we will be overall as we end the year in a very conservative estimate, because we've always been very conservative in giving you the guidance, should be in the range of 23-24%. So it won't be as the same as quarter 3. And we are all aware that, in the month of April, May, the elections are going to come up in the economy. So there will be, March is a month where people are more busy in terms of paying their taxes and closing their books of accounts. So the consumer behavior is a little bit of a conservative during quarter four. Valentine's Day, weddings is one trigger for sales. Women's Day in the first week of the March is another trigger where there are reasons for buying. And then as we end the March, there are usually offers for Gudi Padwa is there in certain regions, but then some amount of year-end offers and sales happen. But then the focus then for the organization and for the industry shifts to April, May, which is Akshaya Tritiya. And Akshaya Tritiya is on the 10th of May. So build up of inventory, planning, reaching out to customers. Customers wait for the new year to begin. So this is how the journey continues. So this is what would be my answer to your question.
All right. Got it. And second question was on our operations in the northern region. Can you share what kind of improvement that the company has seen in the revenue throughput during this quarter or over the last 9 months? Basically, has the gap between the revenue throughput in the north, has it narrowed versus east? Just trying to understand how far away are we from attaining optimal store throughput in that region.
So if we look at the blended, so basically north is mostly the own store. There is only one franchisee store in Aligarh. If we exclude that franchisee store, what we have said that our overall average sale per store is 37 crore, which was around 33 crore last year. So north has seen an improvement. So now north and east average is same. So let's say east is 27 crore, north is 28 crore per store per annum. So we have clearly seen an improvement. Even south has also reached 27 crore. So what we have said earlier in various calls, so if a store achieves a minimum turnover of 15 crore, it can be 13 crore also, then it achieves a break-even at a store office level. And the moment it touches around 21 to 22 crores, it becomes a full 100% break-even and it covers the interest cost. So that is what is the situation in north, and north had a huge potential. So now we have 22 stores in north. So almost 10-11 stores in UP and around 10-11 stores in Delhi NCR. So we see a huge potential, and that is also signified by a high spread ratio which we have seen in north. So overall, we are very positive about the north, and that will continue to be cornerstone of our future growth strategy, east and north, as you say.
And one more thing, if we again delve a little bit deeper, while east is growing at around 16-17%, north is growing at around 20-22%. So the rate of growth for north, again, because the base is lower compared to east, and also, we are there as a newer brand in the north, and the potential of growth is that much more. While in east, in Bengal, there is still scope of growth. It is not that the scope of growth is anyway lower, but north, the growth is much higher. So the focus continues to remain, and the stud ratio in the northern part of the country, as mentioned before as well, is almost double of that of the eastern part of the country. So that is also a very strategic focus area for us to focus and ensure that the bottom line continues to remain strong due to the sales in northern part of the country.
Got it. Just one clarification. The 20-22% growth rate that you mentioned for north, that's for the current quarter or for 9 months?
9 months.
No, that is 9 months.
9 months.
9 months.
Okay. Got it. I'll get back in the queue for further questions. Thank you.
A reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Yes, sir. Hi. Congratulations on a good Q3 performance, as well as many firsts that you have introduced in this quarter in terms of lab-grown diamonds, ONDC, as well as the Ram Mandir collection. Question first is on lab-grown diamonds. So Suvankar, prices are continuously declining for such diamonds. I guess this is more due to commoditization with more and more sort of people entering the space in terms of manufacturing. So wanted to check your thought process for entering into this category. So any color on this?
No, Devanshu, see, the point is, the price going down is a factor of the supply that is increasing, but the demand it has not been created to the extent that the supply has been there. One of the reasons for the price going down is that, in the last 3-4 years, I'm aware, being a part of the Export Promotion Council, is that there have been large exports of lab-grown diamonds, and US as a market was in high demand for that particular product. But over the last 6 months, there has been a slight slowdown in the US economy, leading to a lot of products that comes back from that country. They give it on sales on a return basis and various other options. So therefore, suddenly there is an excess supply of lab-grown diamonds, where players like us are planning to build up the demand. We have the customer base. We will reach out to the customer. And also this commoditization which is happening is an unfortunate phenomenon, because ultimately there is a demand for studded jewelry. The lifestyle of the consumer, the way it is changing, people are preferring to wear Western designs more compared to the traditional designs, unless there is a traditional occasion in the family, be it a wedding or a puja or any kind of such auspicious occasion. But other than that, on a day-to-day basis, it is going to be Western designs that will drive the sales. So I think it is up to various organizations and brands to focus on designs, and that is what we are trying to focus upon: the design aspect of it, the experience, retail experience aspect of it. And in that kind of an experience, if we can provide the product to the consumer, I'm sure that the future is bright. Yes, it will not be a substitute to diamond jewelry, because diamond jewelry is natural, real. It will have its own inherent value to be captured over a period of time. And lab-grown diamond jewelry will be focusing on the fashion aspect of it. So we need to play accordingly and cater to the needs of the consumer. But the journey is just beginning. We have launched with a pilot of 2 stores. I'm sure others will also follow very soon. And then gradually, as the demand gets created, the prices will stabilize.
Got it. And Suvankar, is there any difference in customer profile for people who purchase lab-grown diamonds and natural diamonds?
See, in our last 3-4 months, we have seen that those buyers who are buying lab-grown are very much those buyers who have been buying diamonds also, right? So once you fulfill the need of buying a natural diamond in whichever size or form, then as a second level in terms of variety of diamond or some kind of requirement and a desire to have a bigger size at a lower cost. So those are the way things are moving, and that's where it is.
Got it. Second question is on the store opening. We have done very well on company-owned, company-operated stores with 12 openings in Q3. I guess this would have required incremental capital of about 250 odd crores. So have we seen some increase in debt, or we were able to meet this capital through internal accruals?
So Mr. Banka will take on the debt figures, but we also need to keep in mind that we had our IPO in the month of July. So therefore, that cash inflow into the organization was fully utilized in terms of the inventory stocking, whether it be our existing stores or the new stores we have opened. And as far as debt is concerned, Mr. Banka, you can please.
Yeah, Devanshu, so basically our inventory level has increased versus March by almost, let's say, 268 and once around 400 crores. So we have raised IPO funds around 270 crores. So the incremental inventory and incremental capex, net of borrowing, net of internal accrual has been funded by the borrowing only. So the borrowing which has reduced during July, August. After that, it has consistently increased.
Got it. Can you call out the debt figure at December end? What is the debt level?
So December end debt working capital figure should be around 1346 crore. So when we started the year, it was around 1177 crore. And as of December, it is around 1346 crore. So around 140 crore, 170 crore of incremental borrowing. So this incremental 170 crore plus around 270 crore of IPO funds and then internal approval. So there has been CapEx involved also.
Got it, Mr. Banka.
And to add to that, Devanshu, the average cost of debt for us is in the range of 5.5% to 6%, because most of the debt that we have taken is in the form of gold metal loan. Yes. So that is how the whole thing is.
Got it, sir. Got it. And so, Uncle, you mentioned that franchisee store has not improved because of elevated gold prices. But from peers' perspective, we see that they are opening quite a aggressive number of franchisees. So, any bunching up of franchisee stores that we can expect in the coming quarters for Senco?
So, all I can say is that there are franchisees in the pipeline. Quarter 4, project work is on, and there might be 1 or 2 stores that gets added in quarter 4, and a few more stores that gets added in the quarter 1 of the next financial year. So while our full appreciation and for the effort that has been put by the other fellow jewelers in ramping up the franchising business, but it just gives shows all of us the opportunity in which we can also see and feel the potential that the unorganized to organized play happening. I was personally myself visiting a certain tier 2, 3, 4 cities to just have an exploration of the market. And I could feel that, yes, the unorganized segments there are going through their own set of challenges, and it is only opening up the opportunity for organized players like us to open more stores. So that this is a good sign, and we'll continue to focus on increasing more and more franchisees.
All right. Last question from my end. It's a bookkeeping question. Last year, Q4, our gross margins were very good at 90-odd%. Versus full year FY23 level of about 16%. So wanted to check, is Q4 a seasonally strong quarter in terms of gross margin due to higher studded? Is this a normal seasonality?
So the one thing I just said that the gross margin Q3 is the best margin. So sometimes the gross margin is also impacted by the price movement. So basically, let us look at a stable gross margin of 14%, right? So what we saw in Q1 and Q2 was a lesser gross margin, and which has been compensated by a full gross margin in the current quarter. So for a whole year, if you look at the EBITDA margin, we have now a blended EBITDA margin of 7% for the whole year. So that is what we are giving the guidance. Primarily, this is due to the stud ratio, higher wedding season sales, and partly movement of the gold price as well.
Got it, Mr. Banka. Thank you for taking my questions, and all the very best to the entire Senco team. Thank you.
Thank you. Next question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Hi, Shivankar, Mr. Banka. Good afternoon. Thanks for the opportunity and congratulations.
Thank you.
I was more curious. You mentioned that SSG of 17% and South you had a higher SSG. So the background is that when we hear the other competition, they've highlighted incremental competition which has gone up in quarter 3, discounting and even the promotions. And in that context, you have got a better SSG. So I just wanted to have a little more color. What is it that you did, or is it primarily led by the store expansion?
No, so the SSG part is where we've had our stores having more numbers, but the competition is giving the impact in terms of our margins. So if you look at our EBITDA levels, and you will see that it has come down by 30-40 basis points, which is mainly driven by the offers and discounts that not just us but overall the industry is having to give to continue to attract consumers. And what is happening more is that in the quarter 3 towards the second half of the quarter, there has been a sudden jump in gold prices, but the wedding season was on. So how do you continue to attract your consumers? Is that, you trying to make the offer more attractive? So till Dhanteras, there was a reason for the consumers to buy because of the auspicious season, and